In this video, we discuss 12 of the most important questions to ask any financial advisor before hiring them. Coming up next on Holy Schmidt.
Holy Schmidt!
There's so much noise out there about somebody somewhere trying to take advantage or downright lying to someone to get their money. This usually happens via something called a phishing scheme or a spear phishing scheme if they actually know you personally or they have your data anyway. All of that activity is highly illegal. But there's another area which is just as bad, which may not be illegal. It just is one that you need to be fully aware of and vet so that you can put the bad on one side and the good on the other when you're making your decision about who to hire. And unfortunately, as bad as some of those actors are, people generally need advice on how to plan for retirement, and they need a set of tools to help them help themselves when it comes to weeding out the bad ones and focusing in on the good ones. This video will give you 12 gatekeeping questions to ask any financial advisor to help you separate the bad from the good, or at least the possible. And frankly, most of the time when you get through the 12, you'll have a pretty good idea of which direction you should go. Most importantly, these questions will help you decide if they're on team you or team themselves. All right, let's go. Question number 1, who is your typical client? You don't want them representing highly successful entrepreneurs if you are an average person heading into retirement, and vice versa. Misalignment causes them to not pay attention to you, to give you bad advice, or just simply they take the fee and have the most junior person on their team manage your portfolio and your relationship. You want the avatar, as the term goes, to be someone who looks a lot like you so that there's a strategic fit between their advice and what you want to do at your stage in life. More importantly, you may have access to a network of like-minded people if the people they represent all look similar to you and are at your stage of life. Question number 2, is the person a registered investment advisor, or R.I.A. for short? This seems like an innocuous enough question because aren't most financial advisors registered with some accredited body? Well, yes, but that's not the same thing as an R.I.A. As you'll see in a minute, this could be the single most important question you ask your prospective financial advisor because it will instantly help you determine if there's a conflict of interest or not. Registered investment advisors are held to a much higher standard than traditional investment advisors. They have a fiduciary duty to you, a duty of care. RIAs are required by law to put their clients' interests ahead of their own. Any investment advice must be thorough and complete, and any conflicts must be disclosed to you if they are an RIA. And super important, currently RIAs represent about 10% of the financial advisory universe, so they're rare, but also it's an important distinction to make when you're talking with a potential person to help you with the rest of your retirement life. This will become clear with the follow-up questions that you're going to ask in a minute. If they tell you that they're an RIA, it's all about the fees and other income that they receive based on your funds. Question number 3, are you or your firm affiliated with a broker-dealer? Sometimes being affiliated with a broker-dealer is a good thing because a layer of costs is being removed. This is particularly important if someone is engaging in many trades throughout the calendar year. The broker-dealer deals directly with the market, and in that regard, it helps reduce costs. However, for the purposes of selecting a financial advisor, it's a big red flag if you're a retail investor, i.e. you. This is because the days of frequent trading for portfolio optimization are long behind us. That worked in the 70s and maybe in the 80s, but today, people generally buy some sort of index fund or some composition of mutual funds, low-cost mutual funds, to manage their way through retirement. If you're dealing with someone who tells you that they're going to buy and sell regularly on your behalf, this is going to create a lot of transaction costs which you pay for and they receive. It might also still be an indication of a conflict of interest because you don't know what you don't know when your representative is dealing directly with the broker-dealer. You don't know what arrangements have been made between the two of them. Question number 4, does your firm have either a proprietary mutual fund or separately managed accounts? This is a big one. Ironically, there are more mutual funds in the United States than actively traded stocks. This should give you a sense of the profitability of managing a mutual fund. In fact, Forbes published an article several years ago which discussed the fees that mutual funds charge. There are expenses called the expense ratio, there are transaction costs, and there are opportunity costs that are lost because mutual funds keep a significant portion of your investment in cash in case they have a redemption and they need to clear that redemption. The article said, adding all of those fees up, your total cost is north of 3% if you're doing it in a non-taxable account. If you're doing it in a taxable account, it's north of 4%. When compared to an index fund with an expense ratio of 0.5% in most cases, right around there, and virtually no transaction costs because it buys the assets and holds them, you're talking about paying 80 times more to own the mutual fund in expenses versus an index fund. And since over 90% of money managers can't outperform the S&P 500 index, it becomes an incredibly expensive proposition. The next follow-up question, do you or your firm receive any third-party compensation for recommending a particular investment or particular group of investments? This is the catch-all question. Once you know the answer to this question, you know that they're acting as your fiduciary as an R.I.A. They're not receiving funds from a broker-dealer or any other type of hidden fees, then it's time to move on to the next set of questions. The next question is, how do they actually get compensated? They aren't doing this for free, and frankly, they shouldn't do this for free, because if they've made it this far, they are starting to look like someone you want to do business with, potentially anyway. But you're ultimately paying for it, so you should know how they're going to get compensated. Question number 7, what services do you offer beyond financial strategy? As you get older, your financial situation will undoubtedly become more complicated, and saving for retirement is just one of the many things that you're going to need to do. You may be saving for a wedding, a child's college education, estate planning, etc. All of these point to a particular set of skills that go beyond where to allocate your assets. You want your R.I.A. to have the resources available to handle all of these and more. Question number 8, where will my cash and funds be held? This is a very important question, and the answer to this question will help you from getting fleeced by a con artist like Bernie Madoff. The R.I.A. and the firm should always keep your funds in a third-party custodian account like Schwab and never have the ability to withdraw the funds from that account. This is called limited power of attorney, and simply put, they can only direct your funds within your account to the investments that you approve. They can't take the funds out of your account and direct them someplace else. Question number 9, do you have someone who is accredited in Social Security analysis like an RSSA? This is a particularly important one because Social Security represents 40% of the average person's retirement cash flow. Having a credential like a registered Social Security analyst means that they have the knowledge necessary to direct the recommendations in a more holistic fashion. I can personally attest to this, by the way, because I do hold the RSSA designation, and I can tell you the level of knowledge is night and day compared to a financial advisor who happens to be good at searching up Social Security on the internet. Question 10, do you have attorneys and CPAs on staff, or at least access to attorneys and CPAs that you would recommend for things like estate planning and tax optimization? Part of being a holistic financial services company is ensuring that the investment advice and the adjacent activities like wills and estate planning, as well as taxes and tax returns, all go hand in hand. Knowing the complete picture is vital, and having access to the latest laws and technologies is really important if you want to get the best output for the inputs you put in to your retirement. Question 11, will I have access to you personally if I hire you to optimize my retirement savings and other related activities? All too often, once a firm gets a yes, the new client is put into the machine and doesn't have access to the person who brought them across the line. In order to mitigate this problem, you want to make sure that the person who made the promises to you about the services that you receive is the same person that you can hold accountable if those promises don't come true. While no one can ensure investment performance, there is a host of activities that the firm should be able to ensure, and you want to make sure that they are there for you, delivering on the other aspects of the relationship. The last question on the list, one that's vitally important, given what you know about me now, what is your advice about investing and life management? While this is the last question on the list, it's really important that you feel comfortable with the answer to this question, because after all, it's your money that's on the line, not the firm's money that's on the line. If you're not entirely comfortable with the answer to this question, by the way, after you've had the opportunity to discuss your goals and aspirations, and after they've had the opportunity to interview you as much as you interview them, then you don't want to commit your resources to this institution. And while nothing is certain in life, the one thing that is certain is if they don't understand what your goals and aspirations are, it's very unlikely that they will get you to achieve your goals and aspirations when it comes to your retirement and your retirement finances. Those are my 12 on questions to ask a financial advisor. If you have others that you want to add to the list, put them in the comment section below. This is Jeff Schmidt. Thanks for watching, and don't forget to click subscribe and notifications so that you get alerted the next time I post a video. I post about twice a week. I'll see you on the next video.